Hi everyone, welcome back to our channel FinChase. So this is going to be last and a final video for our case study that we are trying to solve from the last 4 to 5 videos. So if you are consistently watching our channel and have followed our previous 4 to 5 videos, you will get to know like हमने अभी तक we have completed all the line items in the income statement except our interest expenses. And I have also mentioned in the previous video that in the upcoming video, that is this video, we are going to first of all estimate our debt, and after that we will complete our income statement, complete our balance sheet, and complete our cash flow statement. So first of all, let's go back to our assumption tab. Okay. And let's try to build our debt schedule. And once we are done with that, then we will try to solve our balance sheet, our cash flow statement, and we are done with this today's video. Okay. So let me copy the formatting. We will keep the formatting same in our whole model, right? And copy this, paste it here. Okay. And I will write here debt schedule. Okay, and we can remove this grid lines as well because this is not looking great. And I will copy this formatting and paste it here as well. Okay, now for the debt schedule, what we can do is we can go to our case study first and we will see like whether there is any information given to us about a debt schedule. Okay, so we can see like this all information we have used till now. After that, we have that the cost of setting up one more screen is around 25 million, and it will be funded by debt and internal accruals, which means that if the company is going to buy one more screen, company needs to expend around like 2.5 crore, 25 million उसको करना पड़ेगा, and that 25 million, that 2.5 crore will be funded by debt and the internal accruals. It means that if our number of screens is increasing in the upcoming years, then our debt is also going to increase in the upcoming year. Okay, so we can assume, since we do not have any information whether that proper 25 million is going to be funded by debt, or matlab what is the ratio that in which this 25 million will be split between debt and internal accruals. So what we can do is we can assume that entire amount of a 25 million is going to be funded by debt. Okay, so for this we can link our capex here, or what we can do is first of all beginning debt balance, right? And we can do one thing here is we can freeze the panes here so that we come to know that which year we are talking about. So this is a fiscal year 21. We can directly link this debt balance from here, that is 300 and 320. All right. Now then add additions or increase in debt balance during the year. All right. Now, if we are talking about additions, so how we are going to do that? For fiscal year 22, we know like there is a 20 of addition, right? But for the rest of the years, how we are going to calculate that? Um, we know like we have calculated our capex. Capex basically means capital expenditure, right? For example, if there is a company like Bharti Airtel, the capex for the Bharti Airtel can be anything like tower purchase करना है, spectrum purchase करने हैं. So capex include the whole amount. But in this case, the in the Cinepolex case study, okay, our capex is only of because of a one thing, that is of a increasing number of screens, right? that is number of screens increasing to 42 from 35. So there is an additional capex of 7 screens, that is 7 into 25. So if we see, like if we multiply 7 multiply by 25, it comes around like 175. I guess it is in decimal, so we have computed it. So we can take it as capex as our increasing debt balance, because we are assuming that whole amount of increasing in number of screens will be funded by debt only, right? So we can link this capex amount, this amount here, okay, and then we can do less repayments of debt. We do not have any repayment, so we can keep it at 0, okay, and after that there will be a closing balance. Closing balance will be the sum of beginning balance plus additions minus repayments, okay, and the beginning balance for fiscal year 23 will be the closing balance of this, right? So this is how we can build our debt schedule. Okay, now we can go to the income statement, and we can go to our case study, and we can see like there is an interest rate of a 10%. So we can calculate our interest amount as well, that is equal to this debt balance multiply 10%, and we got our interest expense for the rest of the years as well. All right, so this is how we can build our income statement. Our income statement is almost completed now. Now we can keep our focus on balance sheet. Now let's come back to the balance sheet. Now let's see like what all line items we need to project for our balance sheet. We have cash and cash equivalent, we have net fixed asset, OCL, that is other current liabilities, debt balance, share capital, reserve and surplus. So for the cash and cash equivalent, we need to build a cash flow statement that we will see in upcoming 5 minutes. Okay. Uh, Coming down to the net fixed asset, we have already built an debt depreciation schedule or capex or changes in PP&D in the assumption tab, right? So what we can do is we can link our net fixed assets from there. How? Net fixed assets is going to be the, we all know like in the balance sheet, net fixed asset का मतलब क्या होता है कि gross amount minus depreciation or accumulated depreciation is equal to net fixed assets, right? So the amount that we are going to show in our balance sheet will going to be of a net amount, right? So net amount will be equal to previous amount of a PP&D plus current year का capex, that is changes in PP&D. This is a gross amount. We need to deduct the depreciation from it. The depreciation, the total depreciation of the current year. All right. So this is the net fixed assets for the particular years we are trying to solve out. Right. Now we can come around to the OCL, that is the other current liabilities. For the OCL, what we can do is we can go to the assumption tab and we can make a drivers for that as well, and we can write here balance sheet drivers other current liabilities as a percentage of revenue. Okay, so what we can do is we can calculate this percentage, that is OCL divided by revenue that particular year, and we can convert this into percentage, and for the rest of the year we can calculate this. We can copy the formatting from here and we can take the average of the last 2 years. I'm doing it pretty fast now because what I'm assuming is like in the recent 4 to 5 videos आप go through हो चुके होंगे and you got the flow now कि कैसे एक मॉडल के अंदर हम चीजें करते हैं, right? So that's why I'm doing the pretty much faster than before. So if we want to calculate the OCL, what we can do is we can link our revenue from our income statement, that is this, and multiply this with our assumed average OCL as percentage of revenue so that we get our OCL. So this is our OCL and we can directly link this OCL from assumptions from here. All right, we got this. Now for the debt part, we have already seen in the today's video that how we are going to calculate debt. That is from here. Okay, this is our debt part. This is our total non-current liabilities. And if I talk about our equity share capital is only the closing balance of the last year will be the beginning balance of the current year, right? And for that, reserve and surplus will include net income for the current year, and this is how we can calculate, sorry, our total equity. Now we can see like there is a difference. 1 minute. Let me calculate total liability and equity. That will be the sum of total current liabilities plus non-current liabilities plus equity. Now we can see like there is some difference between liabilities and total asset part. That is only because of cash and cash equivalent. Okay, that we will see from the cash flow statement when we will build our cash flow statement. So this is how we can build our debt schedule, income statement, balance sheet, and in the next video we will see the cash flow statement and final, like whether our balance sheet is matches up or not. So this is what that we have covered in the today's video, and stay tuned for more videos. And if you like our content on our channel, please like, subscribe and share our video to your colleagues and friends. Thank you so much.